This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now as we take a look at the market trade action that we saw on Tuesday. There is plenty to discuss as soybeans were the star of the show. Matt Bennett, agmarket.net, joins us here today. Matt, good to catch up with you again, buddy. How are you?
I'm doing great. How are you doing, bud?
I'm doing good. It's good to see you're back in the office, and I know it was a busy harvest season for you and your crew, but getting things wrapped up there in East Central Illinois, and it sounds like for the most part, harvest across the country is getting close to that finish line here as we get into the month of November, Matt.
Yeah, just kind of a blistering pace these last 3 weeks. The weather was awful good, start to finish for most people. But especially over the last couple of weeks, it's just been, we had a little bit of rain last week, of course, in a few places, but it really didn't deter people. You see harvest on both corn and beans nearing the finish line already. So there's no question that it's been quite the pace. And so it's been really interesting to see in most places, especially West, bases held right together at a time whenever harvest was going as fast as it could go. So there's no shortage of things to talk about whenever it comes to harvest, but I can tell you, we're very fortunate, to have been able to get wrapped up ourselves. Most of my crew is a little older, than what I am. I'd put them up against anybody, but I'll tell you that they were all getting a little grouchy and ready to be done by the time it was over with. So I said, let's let the field work wait a couple, 3 days. Let's get everyone kind of recuperated and excited to come back to work.
Definitely take a nice long nap, get a meal at the kitchen table and not in the cab, and enjoy a couple days off for sure. Well, you mentioned basis, and I know we're going to get to that probably here in just a little bit, but outside of that, a lot of other items in this market trade to discuss, Matt, here as we're wrapping up harvest. We're kind of shifting our focus back to a few different other topics. I mentioned this at the top there. Soybeans, the star of the show on Tuesday, and a little bit of a late rally in corn and wheat. But let's start with soybeans. What's your thoughts there after Tuesday's trade action?
There's just a lot going on with this bean market. You could say, hey, what's going on in Brazil with people basically blockading passageways to be able to haul beans to port? Kind of a big issue as far as the short run's concerned. Okay. But so you got to ask yourself, why would we run up 25, 30 cents on beans? And I think it's got maybe a little more to do with China, actually, whenever you start talking about this situation where, hey, all COVID restrictions could be lifted sometime early spring. To me, that's a weird announcement to make. I mean, they've obviously bought a lot of U.S. beans here over the last couple of weeks. And so, they come out with an announcement they might be doing something in February or March. I mean, it's odd, but quite frankly, I think that it's a sign. It's a sign to the market that, hey, you know what? They may be stepping back in here and doing something. Now, I guess, experience in the past has always been whatever announcement they make, you got to read between the lines on exactly what's going on. Seeing the markets rally like this. I mean, if the Chinese are saying that they're getting ready to lift restrictions, they know darn good and well it's probably going to rally the market. So I don't know that you can expect any purchases immediately here. But by all means, there's a reason they came out with that announcement. I don't know just what it is yet.
Well, bean oil strong, although bean oil did kind of back off through the day. Palm oil was strong overnight into Tuesday. And, watching this soy complex now about 30 to 50 cents above that $14 mark, which has kind of been our overhead resistance here for a while. We have strong demand despite the river issues, et cetera. You brought up China. I'll be curious to see with soybeans here, Matt, moving through the rest of the week as we head towards that next WASDE report. Can we stay above the $14 mark? Will we stall out? Will we go higher? I think that's a question that's going to be watched closely.
Yeah, it certainly needs to be watched closely. You look at bean meal and oil, quite frankly, pretty strong. I mean,
Hmm.
meal's kind of mixed on the day, but oil is strong. Meal has been very strong of late. And a lot of folks talking about how it's quite competitive, as a feed source at this point. Obviously DDGs are not super cheap at the time being, but overall, you've got to think crushers are doing quite well. You look at crush margins, they're pretty darn good. You've got more renewable diesel every day coming online. I know there's mixed reviews on what everyone feels about that, but let's face it. I mean, it's a cleaner burning fuel. And at a time whenever we're talking about not hardly having enough diesel fuel to get through the next month or two, I'm all for us trying to find alternative sources grown right here in our country that we're
Hmm.
able to benefit from, have jobs from, and people say, well, we're going to lose more of our export share as we move forward. And this is more of a big ticket thing, Jesse. But I'll tell you what, I'm more than willing to lose export share to South America if we're using more of our beans right here at home. And so I do think that the demand for beans is still going to stay quite strong. But as a producer, you have to ask yourself, you're looking out to, let's say next July 1461, next no 1390. I mean, mercy. These prices are really impressive. And so if the Brazilians truly do have 150 or better metric ton crop, you got to ask yourself this: what does a world balance sheet look like? Yes, the U.S. is tight, but the world balance sheet isn't tight. It's actually doing quite fine. It's not burdensome by any means, but it certainly isn't tight. And so you're probably going to have enough beans in the world. And that's what, in my opinion, you're going to have to get some tightness. People feel like there's tightness to get the funds really to step in whole hog and buy these beans. I don't know that that's going to happen just yet.
Well, on the flip side, corn, Matt, we've been struggling with $7. We can't break through it, and still even struggling on Tuesdays. We caught some late buying. I mean, this corn market is a bit of a different animal compared to soybeans. We got some different stories. I know the export front remains dismal in corn. What's your thoughts with corn and the fact that we just can't seem to get through that psychological $7 barrier right now?
Whenever you start looking at the corn market, a few things come to mind. You're a sub 1-2 carry right now. Okay. A lot of folks say, well, what if they lower yield again? Yeah. I mean, whenever you start lowering yield, a lot of times it continues to get lowered. But Jesse, it sure seems to me that we're seeing a few more ground piles than maybe what I would have imagined we would see here lately, especially on social media. I know that those can get magnified somewhat, but I talked to a lot of producers that say, actually, my corn's a little bit better than what I thought it was going to be. And I think relative to beans, I'm hearing that more so on corn. Now, I'm not out here proclaiming we're going to have a bushel or two increase on corn yield, but I don't know that I can count on corn yield getting smaller at this stage of the game. Regardless of all of that, it's tight. Well, you look at the export market, and obviously, you come in here on Sunday night worried about this Black Sea corridor. There's no doubt that with the Russians saying, "Hey, we're going to shut this thing down," there's a lot of people really, really concerned. You saw the wheat market skyrocket, but these corn stopped $7. Dead in its tracks. And so is $7 going to be an area that we're able to get through? I think there's certainly a possibility, but at the same time, there's a whole lot going on in this world right now. And yes, I mean, exports are just pathetic. Moving forward, Jesse, I do think U.S. exports will get better. I think there's way too much uncertainty in that Black Sea region. I think that whenever you stop and analyze it, the Chinese, even though they're going to have what I would call a respectable crop, they're actually going to have a big deficit again as far as what they're producing versus what they're using. And that's been something that's happened over the last several years. And so, yes, I know they had a lot of corn in reserves, but my thought process is that they're going to have to buy corn from somewhere. And bottom line is, I could see U.S. corn hitting the world market, whether it goes directly to China or not. I don't know, but I think that U.S. exports probably won't be as abysmal as what they look today moving forward.
Cash basis side, corn and even soybeans as well. You brought this up earlier how basis has firmed as we've gone through harvest. It's looking pretty firm in the interior in many areas. For farmers, you mentioned those corn piles on the ground. I mean, if they're looking to take some to town and get rid of it, obviously they could sell it, take the cash and run, but they also have a chance for some re-ownership here too, I would think, Matt.
They do. I mean, I'll tell you, Jesse, it's crazy. Right here where I'm at, We were finishing up harvest, and they were pushing for our corn, but they weren't pushing like they are west of the Mississippi. I'll tell you, it's two different worlds we're talking about here. And so, in my part of the world, we were getting, I don't know, within 20 cents, 15 or 20 on a basis at a local elevator type thing. An elevator system like a end user like ADM Decatur, they were running 20 over. Now they've backed off a shade this week to 10 over. And so you start talking about a guy in Missouri, for instance. I've got someone close to Kansas City, and he told me that he was getting what I said, you're getting what, 670? He said, no, I'm getting 760. And so he's getting $1 a bushel more for corn than what I'm getting. The thing is that corn of his has to move west. My corn in central Illinois has to move west. There's so much usage in that part of the world. You get into parts of Kansas and Nebraska where they didn't have a very good crop. We know there's a lot of animals out there. There's a lot of cattle out there. There's a lot of ethanol plants that are churning out DDGs as well. And the bottom line is you've got to have corn to fulfill the demand out there. And so you're going to see this migration move from east to west. Now, that definitely has propped the basis up as you've gone through harvest. But Jesse, the job for these originators is to get this corn secured over the next few months. And I don't think that you can count on the basis just being white hot throughout this marketing year. I think some really impressive numbers have already occurred. It's going to have to back off as you see a lot of grain move from this point until maybe end of February. But then on the other side of that, I think you could see some real fireworks depending on what's going on, not only in South America, but the planting situation in the U.S. I mean, you could get some pretty excited buyers if things don't look too rosy whenever you get out towards the late spring, early summer timeframe.
Matt Bennett with agmarket.net is our guest today here on the show. Matt, let's move over to the Russia-Ukraine Black Sea situation. That felt like it took a slight backseat on Tuesday, but still very much at the forefront of our minds. Some mixed messages, it sounds like, coming out of there, but still at the end of the day, very tenuous situation that has impacted this wheat market. We saw some late buying in wheat on the day on Tuesday. Some other news items may have contributed there with Argentina possibly maybe slowing some exports or allowing some delayed contracting. But you think about this wheat market and the Black Sea issues and just the impact there. It feels like that this is going to be a wait here for quite some time, Matt.
Yeah, to me, Jesse, I feel like a lot of the announcements that we've gotten over the last several months have been interesting in timing. You go into the weekend and all of a sudden, hey, obviously there was a reported bombing. I understand that Russians come in and say, hey, we're not going to allow any of this grain to move the region. But I've got to think, Jesse, that there are people that have a pretty decent idea when some of these announcements are going to be made, because it just has seemed like the market was just crazy dynamic early on when these announcements were made. Most of them over the last I don't know, a couple months really haven't moved the market as much as this one this week did. You were looking at limit higher calls for this wheat market coming into Sunday night. We didn't quite fulfill that, but we were still all three wheat. You're looking at 30 to 50 higher most of that session on the overnight into the day session. So it certainly was a market mover. It's a tenuous situation, as you suggested. Boats were leaving the Black Sea region, but from what we're hearing, no one else is wanting to come in, and for good reason. I've told you that before. If I'm a captain of a Maersk ship, good luck getting me talked into coming to work on Monday morning. If I'm heading to the Black Sea region, I'm finding a new gig because there's just a whole lot going on there. And whenever you start hearing about shots being fired, we heard that yesterday, and a couple of people supposedly lost their life. You start to hear about that kind of stuff, and that could really blow the lid off this thing. You could really have some extremely nervous folks whenever it comes to grain movement out of that part of the world until we get a little more stability. And again, that's part of the reason why I think U.S. corn exports could be a benefactor there, which obviously wheat can play into that as well.
On the wheat market also, Monday afternoon, crop condition ratings out. I think the worst on record or close to it. I mean, just a reflection of poor conditions in the southern and central plains. And I know that's something that we have to pay close attention to as well here, just with the poor conditions down there throughout the plains.
Absolutely. In this drought situation, you look at the drought monitor, and I mean, it's worse than it was in 2012 at the height of the drought, as far as how much of the continental U.S. is covered by drought. And so, what's going to happen as we move into next year? I know it's impacted some folks' tillage practices for this fall, and for good reason. People are worried about, hey, if I leave things undisturbed, maybe there's a chance we'll conserve enough moisture. You get into parts of the plains, into Panhandle of Texas, some of the growers I work with down there talk about fallow for a year. Guys in the heart of the Midwest have no idea what that even is. Well, they're laying out for a year and getting that ground prepared for an every other year rotation where they can build up moisture and then be ready to go. And I'll tell you what, whenever people are in the situation where they don't even know if they want to do tillage, it's dry. So it is concerning, not only for right now, not only for the wheat crop right now, but for the growing season in 23, because you know what, we're sitting on very tight stocks and stocks use ratios here in the U.S., and we really can't afford to have any sort of level of a drought this next year. Obviously, we had one this year, but if that thing moves into the heart of the Midwest, which many times it goes from the Southwest into the heart of the Midwest, if that happens, I'll tell you what, Jesse, Katie bar the door on what these prices could do.
Let's talk livestock, Matt. Hog market Tuesday ended up relatively quiet. We found some support there despite grain prices working their way higher. This has been a nice rally in this hog market. We've maybe consolidated a little bit here as of late. What's your thoughts there?
Yeah, I mean, definitely consolidation. I mean, you look at both hogs and your fats. I mean, typically in feeders, whenever you see corn market moving higher, whenever you see any feedstocks moving higher, and you still are able to hold the market together and not plunge, I mean, it's a good day in my opinion. Again, a lot of this has to do with demand. A lot of this has to do with numbers. Whenever you look over at cattle, I mean, fundamentally, you talk about numbers moving into the next 2 or 3 quarters, and you can make some pretty lofty goals as far as what fats might end up doing. And I think that hogs, to a lesser extent, could be lumped into that. But again, triple-digit hog numbers on farther out. Obviously, we've got some carry in this market. Those are probably levels I might target if I was an independent hog producer to lock in some price levels and, quite frankly, some margin. It's pretty tough, I think, at $85 for those that didn't do anything previously. But I'll tell you what, looking out into the future, I think that a person needs to run the numbers, run the math, and like we always say in corn and soybeans, figure out your break evens and then protect them as best as what you can.
Matt, our cattle ranchers, I know last week we saw some pretty solid cash prices out there in feedlot country. You're going to be waiting to see what we get this week. Futures trade was okay. We'll call it quiet on Tuesday as well. As you look at the cattle market, any other thoughts there that you're thinking about as we enter November?
If buyers say that they're not concerned about getting ownership of fats, then they're not being totally honest with you. From the guys that I'm talking to, there's been some awful nervous buyers. And so you've got to think that in this fat cattle situation, especially, we've talked about this before, but equities markets have actually been on a nice little run here the last couple of weeks. And so, that is a good indicator that the consumer is going to feel a little bit better about their situation whenever you've got the stock market moving in the right way, whenever S&P, you name it. Bottom line is, if a person feels good about their situation, then what are they going to do? They're going to go buy steak. And that's what we've seen happen over and over again. And I happen to think that that's the trend that we're going to see continue. But again, from what we're hearing out in the countryside, some of these buyers are calling on people a lot earlier than what they said that they might call on them. And they're trying to secure cattle over the next 2 or 3 weeks, whereas before, they were anything but current.
I should ask real quick on the outside markets. I know we're waiting on the Federal Reserve on Wednesday. We got a jobs report out Tuesday, showed roughly 1 million more job openings than analysts expected. Any thoughts on those outside macro markets, Matt?
Well, one thing that I'll tell people consistently lately, Jesse, is that from a fundamental standpoint on your grains, I can have a lot of reasons to be friendly, but from a risk management standpoint, I'm very concerned not only on a macro situation from the U.S., but on world recession type talk. I mean, there's still a lot of uneasiness here. There's a lot of debt out here. And quite frankly, if you continue to raise interest rates, it's not going to be great for a decent amount of producers here in the ag world. Now, I know a lot lot of producers have gotten a lot of healing up over the last couple of years, but we're fooling ourselves if we're going to say that we don't carry a fair amount of debt in this part of the world. So it is concerning to me. I hope that if we do get a 3/4 point boost, like most people feel that we will, that at least we're not going to be talking super negative moving forward. That hey, we're going to try to cool the jets, because I know there's a lot of folks calling on the Fed to do that because they're afraid that we're going to get ourselves in a pretty tenuous situation. That's what makes these stock markets all the more impressive to me. It doesn't even make sense some days, but it's been an interesting dynamic by all means.
Matt, great stuff as always. Before we wrap it up, any final thoughts you have for us today?
Yeah, just keep your head. I mean, the thing is don't make the assumption that these markets, I mean, this corn market, we can talk about an update today. Look at your chart. We've gone nowhere over the last 2 months. It's just been a sideways grind, higher, lower, you name it, but we stayed in this 20-30 cent range. Don't get lulled to sleep. Manage your margins, because your margins are pretty robust at this point, and I certainly don't want to see those get away from us.
Matt, if folks need some advice, I know they can reach out to you and the team there at agmarket.net. What's the best way to get a hold of you guys?
Yep, just agmarket.net or agmarket.app. Either one's got our contact info, research, and some of the tools we use to manage risk for people.
Fantastic. With that, Matt Bennett, agmarket.net. Always a pleasure, sir. Enjoy the rest of your week. We'll talk to you again soon.
Absolutely. You too.
That's going to do it for Market Talk today. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.